The idea came from actually a few different places. I realized that a lot of folks want to invest in Bitcoin, but don't have the capital without incurring capital gain, without having to sell other assets. A lot of folks are sitting on equity in their real estate, are often over allocated to real estate. So I'm seeing an over allocation to real estate and under allocation to Bitcoin, and no easy way to bridge that gap.
You have Bitcoin sitting at borderline fire sale type prices right now. So if you're going to tap your home equity to buy Bitcoin, there's really no greater moment in time perhaps than right now on a risk adjusted basis. Yes, you could say 10 years ago, but in terms of where Bitcoin is and its position going forward and regulatory clarity and consumer adoption, corporate adoption, I mean, on a risk adjusted basis, if you're going to tap home equity to buy Bitcoin, this is an incredible moment in time.
Hey everybody, Tyler over here with the BitcoinTreasuries.net podcast. Today I'm talking with Sanjay, Mavinkurve, and Chase Palmieri from Sovana. Sanjay's the CEO and founder, and if you watch the shows here at Bitcoin Treasuries, you'll know Chase from our weekly BT Takeover shows, and he's COO at Sovana. So Sovana lets a homeowner get Bitcoin exposure without selling anything necessarily, borrowing anything, or making payments up front. Before I mess anything up or give wrong figures, I'll turn it over to you guys to do the intro. But Sovana's letting people do an interesting thing by buying Bitcoin with their own money. So Sanjay, I'll turn it over to you first. Take it away and let me know anything I got wrong there and what's Sovana been up to.
No, that was a good description. I'd add one more thing. There's also no monthly payments. So to rephrase, Sovana makes it easy for real estate owners to tap into their property equity to make an investment in Bitcoin, but in a way that requires no money up front and no monthly payments. And that's really our superpower. If you're sitting on equity in your property, there are ways today to convert, to tap into that equity to buy Bitcoin. But almost all of those ways require that you make a monthly payment. And by eliminating that, we believe we're unlocking otherwise trapped equity, trapped because a lot of folks either can't afford to or for whatever reason are unable, unwilling to make a monthly payment. Our product, just real quick, our product offers a 5-year term, and there's no monthly payments during those 5 years.
Maybe we can talk the genesis of Sovana first, and kind of bring us in. Like, what was the seed that kind of planted this in your mind? Obviously, you've got conviction in Bitcoin as a durable, hard asset that's going to perform well. But I guess to start, where did the idea come from, Sanjay, and how did that turn into Sovana today? And then maybe we can dig into the mechanics a little bit more.
The idea came from actually a few different places. One is after evangelizing Bitcoin for 14, 15 years, I realized that a lot of folks want to invest in Bitcoin, but don't have the capital, don't have the capital without incurring capital gain, without having to sell other assets. And so that was one of the inspirations. I also noticed that a lot of folks are sitting on equity in their real estate, are often over allocated to real estate. Most homeowners in the United States, real estate accounts for 50, 60, 70% of their net worth. So I'm seeing an over allocation to real estate and under allocation to Bitcoin, and no easy way to bridge that gap. On the other side, I noticed a lot of times, folks who do have the capital to invest in Bitcoin are hesitant because they worry about the downside risk. They rationally, intellectually understand all the arguments I'm making. They think, hey, this guy seems to be making all the right arguments. I get it rationally, but for some reason, maybe because it's such a new asset class, maybe because it's an asset that people really haven't thought deeply about, right? They're nervous about the downside exposure. They're nervous about what if the government tries to kill it? What if quantum? What if it's the MySpace of like, there's any number of reasons, what if it draws down another 80% and doesn't recover? And I noticed that those folks, if they had some assurance that they wouldn't lose their money if they invested in Bitcoin, and we'll get to this part of the Sovana product a little bit later. This is a capital partner facing part of the Sovana product. Also, it's a personal story. I remember in 2022, this is when Bitcoin was on its way down from 70 or 69, which is the previous high. It ended up bottoming out at around 16 or 15 or so. I remember most of the way through that bottoming out journey at around Bitcoin 25K, I remember thinking to myself, I have to buy more Bitcoin. Incidentally, much as I'm thinking right now, I remember thinking to myself, I have to buy more Bitcoin. It's on a fire sale, but I had no liquidity. I had no money to buy Bitcoin, but I did have a property that I owned fully. And I ended up getting a cash out refinance. I ended up taking a mortgage on that house. But I was able to, fortunately, make the monthly service payments. I realized that if I weren't fortunate enough to be able to make those monthly service payments, I could have a property sitting on with a lot of equity in it and unable to tap into any of that. And so that was when I started thinking, like, there's got to be a better way. There must be other people in my position. If we could find a way to unlock the real estate equity without a monthly payment.
I want to talk about something that comes up in almost every conversation I have with Treasury executives. They get the Bitcoin thesis, they see the macro case, but then they walk into a board meeting and the first question is, who's holding it? Are they regulated? Are they insured? Can we audit this? That's where BitGo comes in. BitGo is an OCC-regulated national trust bank. That means they operate under the same federal oversight as the institutions your board already trusts. Your assets are held in segregated trust accounts, never commingled. They're secured in 100% cold storage with multi-signature architecture. If you're building a case for Bitcoin on your balance sheet, BitGo is the custody partner that turns a board conversation from why into when. Visit bitgo.com/Bitcoin-treasury to connect with their team.
It's the best kept secret known by every true Bitcoin OG. CoinKite has been building the gold standard in private key security for years, and they just raised the bar again. The Cold Card Q is an absolute powerhouse for serious Bitcoin treasuries. We're talking a full QWERTY keyboard, air gap protections, and it's built for maximum security. The brand new Cold Card MK5, it has a massive Gorilla Glass screen and new NFC functionality for an even more seamless experience. So if your business is large or small, there's a cold card for you. Head to store.coinkite.com and use the code 6BT at checkout for 6% off. Stop cutting corners on your Bitcoin treasury. You wish for it. Bitcoin is finally on sale. And if you're sitting on BTC and want liquidity without dumping your stack, Arch Lending can make it easy. You can get USD or USDC in minutes, and your collateral stays in qualified custody. They never rehypothecate your assets. As your assets move up and down in value, you can scale your credit line instantly or pull the collateral back when the market runs. If you need help, you get real humans 24/7, not bots. This is Arch Lending. Simple tiers, public pricing. You can check them out at archlending.com.
And that makes me think, it's like, it's a result of, the whole fiat system, the legacy system with excess money printing, that we are in this situation where so many Americans are sitting on, their home as just a major asset. Chase, maybe you can frame that conversation for us. Is that a good thing? Is it a bad thing? Is it just a symptom of the way, money printing and spending have worked over the last, 50, 70, 100 years? That so much concentration of I guess the wealth of Americans, everyday Americans, is sitting in this this home equity that largely goes untapped?
Yeah, well, I mean, if you look at the Jesse Myers chart of different asset classes, and obviously we talk on our weekly show about how strategy is building pipes from the fixed income and bond and kind of cash equivalent market into the Bitcoin network. What Sovana is trying to do here is tap into that actual largest block of capital, which is worth about 35 trillion in US residential home equity value just in the United States alone. And the question is like, how did it get that big? Well, on one hand, people don't talk about this in the real estate world too much, or mainstream consumers, but Bitcoiners who have a kind of a keen eye for monetary debasement would look at the real estate market over the last 50 to 100 years and say, oh, what they're doing is they're actually taking on kind of a fixed fiat liability and going long a more scarce asset that has the ability to appreciate over time. And they're locking that in with, a 3, 4, or 5% interest rate. And therefore, they're paying 3 to 4 or 5%, but monetary basement is outpacing that rate. And so they're actually accreting value over time. They're paying less in real terms to acquire that house over the long term. And that's kind of, in a way, like a real estate carry trade that many don't realize they're making. And you can also say that real estate is, and this is part of our product, a really great asset to tap in terms of credit creation. And that there's a really strong argument to be made that whenever an asset becomes useful as collateral or very easy to borrow against, that it starts to accrete even more monetary premium. Because if I can borrow against this asset for liquidity when I need it, then I can store even more of my wealth in that asset class. And so I think there's a whole host of reasons why real estate has acquired the value that it has in global markets. But I think if you look at the landscape now, you look at the baby boomer generation that perhaps is looking at downsizing from their homes into smaller places, or trying to collect rent on their existing homes and moving themselves into an apartment that's smaller, or trying to find other ways of having reliable fixed income into their later years because they've maybe retired from their career. And you look at that against the millennial generation that just against the baby boomer generation holds a minuscule amount of today's wealth. It's very hard to see how the baby boomer generation is going to get the sale prices, the exit prices in mass that they perhaps have come to expect for their homes. And then at the same time, you see millennials such as myself who are thinking, do I really want to own real estate and all the headaches that come with that and the underperformance against inflation or other asset classes when I can just buy Bitcoin and hold it and take it with me anywhere in the world? And so when you kind of match those things up over time, you have to ask yourself, like, how accessible, how real is the value that's sitting in real estate? And so I think a moment in time right now that Sovana customers are taking advantage of is real estate values are still very high, partly because interest rates haven't fallen that far yet. So people are trying to remain in their homes. They're not eager to go start a new mortgage somewhere else. And you have Bitcoin sitting at incredibly soft, to use Sanjay's terms, borderline fire sale type prices right now. So if you're going to tap your home equity to buy Bitcoin, there's really no greater moment in time perhaps than right now on a risk adjusted basis. Yes, you could say 10 years ago, but in terms of where Bitcoin is and its position going forward and kind of regulatory clarity and consumer adoption, corporate adoption. I mean, on a risk-adjusted basis, if you're going to tap home equity to buy Bitcoin, this is an incredible moment in time. And Sovana really is a unique, one-of-a-kind product in that way. There are, cash-out refis. There are things like Horizon, which we're fans of as well, where you can basically sell a portion of your future exit price of your home in order to gain some liquidity. But in that case, now you actually have a partner that's sitting with you, co-owning your real estate with you and participating in the upside here. What's unique about Sovana, and maybe we'll get into more of the dynamics in a bit, is if Bitcoin is up over that 5-year period, then you actually keep 100% of your home and you get what is essentially free Bitcoin. But you have to accept some downside scenarios that our customers don't believe exist or put very little weight into. But in our scenario, you aren't sharing the participation in your home. and you actually are not putting any money in. And so if Bitcoin is up over the 5-year period, you actually get free Bitcoin.
Yeah, great framing, great setup, Chase. So like, I think you're right. Like all the factors right now make this a really attractive product. This is, I feel like Bitcoiners, talk about this arbitrage, as a way to acquire Bitcoin and tapping the home equity, through all market cycles. But like seeing Bitcoin's price, what hopefully is near some market bottoms. We don't have a crystal ball, but and seeing sky high, pretty much historical all-time highs in real estate prices, really high interest rate expenses right now. Sanjay, I'll ask you, like, was that always the idea here, was to create a product with Sovana, where there wasn't a payback, as a way to really unlock that capital for people who may not be able to stomach, that monthly payment on top of their expenses?
Yeah, that's exactly right. It's a way to make it easy to tap into that equity that could be allocated to Bitcoin, could be put to better use, but because it requires a monthly payment, because almost every way of tapping into your property equity requires that monthly payment, a lot of people just don't have that option.
And a lot of our customers are fully orange-pilled real estate owners who've maybe owned real estate for longer than they've even heard or learned about or began acquiring Bitcoin. And so they're sitting there and they've watched over the last decade or 5, 6+ years, their Bitcoin position massively outperform their real estate. And they're saying, I don't see why this isn't going to be the case over the next 10 years. But if you're somebody who perhaps is a white collar job and you're looking at AI disrupting your cash flow or your career, or perhaps you're going to have to make take a pay cut, or maybe you've been out of work looking for a new job, but there's just not been that much in the tech sector or whatever it is, taking on that additional cash flow burden it can be challenging, and it can especially be challenging if you have other dependents in your family or in your life. And so that's what's really unique about this is, Savannah's not in the business of convincing or educating people on Bitcoin. This is for hardened Bitcoiners who are sick of watching their small, maybe 20, 25, 30% of their portfolio in Bitcoin massively outperform their overweight real estate position. And they're wondering, like, why am I doing this? If I can continue living in my home, because we only work with investment properties and accredited investors, so secondary residences only, because we're not in the business of kicking people out of their houses if the trade ends negative and we have to collect on the lien enforcement of that property, then you're looking at this and you're saying, I'm basically adding property value to my investment properties because I could put on a new roof and I could put money down to improve the roof or the infrastructure or the maintenance of my property, or I could somehow add Bitcoin to that investment.
Really, really cool. Let's maybe walk through the terms. What are the terms? You mentioned the split, in sharing the upside and the kind of downside protection, on your end. But can you walk us through that, Sanjay, and maybe give us the framework of what a real world example looks like?
Yeah, it's actually best understood through an example. So let's walk through. Based on how much equity our customer has in their property, we qualify them for some investment amount. We have math that we can go into later, how we determine that investment amount, but we qualify them for some investment size. Let's say in this example, a customer qualifies for $100,000 investment. The first step is that we, Sovana, using our money, we buy $100,000 worth of Bitcoin and we set it aside. It's important that we don't talk to a bank, we don't talk to a lender, we use our capital, and we can go a little bit later into where we get that capital. But we're not filling an application with the customer's name on it to a bank or anything like that. So we buy that $100,000 worth of Bitcoin and we set it aside. We actually buy the IBIT Bitcoin ETF and we custody it at Schwab in a dedicated, segregated account for this one deal. We don't intermingle this one customer with others. So the Bitcoin ETF, and I'll probably just say Bitcoin from now on, but the Bitcoin ETF just sits there for the entire duration of the term. We're not borrowing against it. We're not rehypothecating. We're not lending it out. It simply sits there. The maximum term length is 5 years, but the customer can end it early at any time. When the term ends, whether that's at the end of 5 years or whether that's earlier at the customer's choosing, whenever it ends, we take a look at the value of that investment. It started out at 100K. If it's gone up, we split the profit. We give 40% of the profit to the customer. We write them a check for 40% of the profit. If, however, and keep in mind that when the customer gets that check for 40% of the appreciation, they haven't put a penny into this. It was all our money to start with. They just get paid. Okay, so what's the catch? The catch is if at the end of the term, the value of that investment has depreciated, so it started at 100, let's say it ends at 80, the customer has to write us a check to make us whole. They have to cover that 20% shortfall, that 20% decline. So in a nutshell, customer gets 40% of the upside in exchange for promising to cover all of the downside in a Bitcoin investment that they didn't put any money into. That really, in one sentence, is the pitch, the offering to our customer. And as Chase mentioned earlier, our customers come to us orange-pilled. These are folks who understand Bitcoin as well or better than we do, and therefore assign a very low probability to Bitcoin being lower in 5 years. And because they can end the position at any time, they don't have to wait the entire 5 years. If they start the position today and a year later Bitcoin doubles, totally not impossible in Bitcoin, they can give us a phone call and end the position, and we'll write them a check for 40% of the profit. They don't have to wait the entire 5 years, but we give them up to 5 years because we know that Bitcoin can sometimes be annoying, as it is now, and we want to make sure that they have ample runway to wait out the ups and downs.
That's really cool, and I think innovative. Having that optionality to close it, like that's not something you can find in it really in traditional products like this at all. So yeah, really cool stuff. Yeah, I'm curious. Maybe we can dig into, I guess, the mechanics of settlement. So the customer is just covering because of the liquidity of Bitcoin. You're selling the Bitcoin if on the downside, and the customer is just covering the initial investment less any loss after the 5-year term, or if they close the term early. Is that correct?
Yeah, if at the time we close the position, the value of the Bitcoin investment is lower than the start. So in our example, it started at 100. If at the end of the term it's 80K, then the customer only has to pay us the difference, the 20K shortfall.
Got it. Cool. And they share in 40% of the upside. That's really cool product without, really having to lift a finger. What's on the back end? You said you guys are essentially taking a lien on the property, a mortgage, and will you take second positions, I guess, behind another mortgage? And what does that look like as far as paperwork and things that the client would take on in that situation?
Yeah, absolutely. And it's actually worth clarifying that if you think about the term, if you think about the deal that we're offering, where does the real estate even come into this, right? You get a 40% of the upside and you cover the downside in the case where the position ends down. Where does the real estate play a role here? The real estate only really plays a role to secure that downside payment. If, and it's a big if Bitcoin at the end of the term, if the Bitcoin investment is lower than when it started, if you write us a check for the shortfall, like you said you would, then your real estate plays no role. Right? The only reason real estate plays a role here is we need to make sure for our protection that you will write us that check in the case when Bitcoin, when the position has ended down. So to secure that, yes, we put often second position lien on the property for the fixed dollar amount of that initial investment. So in the example, we would put a $100,000 lien on your property, because in the worst case, if Bitcoin ends at zero when you settle the position, that's another thing to remember, Tyler. We're not looking at the value of the investment on a day-to-day basis. It starts at 100 on day zero, but we're not looking at the ups and downs of it, right? We're not marking it to market. We're not looking at the value of your home. The only time we look at the investment value is when you say, I would like to end the term, or at the end of 5 years, or I should mention this clearly, you do have to end the term if you sell your house. So, but unless you sell your house or 5 years are up, we do not check the value of the investment day to day. And so we put that $100,000 lien on your home, because in the worst case, you would owe us, if Bitcoin went to zero, you would owe us $100,000. But if you pay us at the end of the term, in the case where Bitcoin ends down, we rip up the lien.
Cool. You guys sound like Bitcoin maximalists yourselves. Obviously, there's a component of your belief in Bitcoin. Like you said, you mentioned your story, Sanjay, of being in Bitcoin for 13, 14 years and, trying to evangelize and convince everyone of the value prop. So, I guess the question is, how are you managing the capital, and where's the money coming from to finance this on your end? And, what does that, flywheel look like long-term for Sovana? If you're building or managing a Bitcoin treasury, you need institutional infrastructure to match. BitGo is the digital asset backbone trusted by thousands of institutions worldwide, offering regulated custody, OTC trading, financing, and settlement all under one roof. They're now a publicly traded company on the NYSE and hold a federally chartered national bank license from the OCC. For Bitcoin treasury companies, this is the infrastructure layer that matters. Learn more at bitgo.com. CoinKite has been building the gold standard in Bitcoin private key security for years, and they just raised the bar again. The brand new Coldcard MK5 brings a massive Gorilla Glass screen and new NFC functionality for a more seamless experience. The Coldcard Q is an absolute powerhouse for serious Bitcoiners, with a full QWERTY keyboard, air-gapped, and built for maximum security. Whatever your setup, executive, Bitcoiner, Bitcoin treasury, there's a Coldcard for you. Head to store.coinkite.com and use code 6BT at checkout for 6% off.
The tip is here, and with it, you might be thinking, is it time for me to borrow against my Bitcoin? Enter Arch Lending. They're building the most transparent borrowing experience in crypto. We're talking industry-leading rates from 8.49% when you borrow against BTC, and you receive USD within minutes. Your assets stay protected with qualified custody, there's no rehypothecation, and verifiable segregated addresses are used always. As your collateral grows, you can unlock more liquidity, adjust your line anytime, and extend your term with a single click. And with 24/7 white glove support, you're never going to feel like you're on your own. Arch Lending, simple terms, public pricing, market-leading rates at every size. You can learn more at archlending.com.
I can jump in there. So on the capital side, you can imagine that because we're offering essentially a principal protected product where you're splitting the upside with the real estate owner, that we can approach more traditional TradFi type pools of capital that wouldn't just be comfortable with Bitcoin alone as the collateral inside the instrument. And so that's really a major part of this unlock here, is that we can go to family offices, real estate credit funds, high net worth individuals, and say, hey, look at this high quality residential secondary property owned by an accredited investor. We can show them the piece of collateral that sits to backstop the principal. And then we can explain to them, hey, look, in the case where Bitcoin goes to zero and the real estate collateral falls by 30% value, you still have not impaired your principal. It's not until Bitcoin goes to zero, not the investment, Bitcoin itself, the entire network goes to zero, and the real estate that is serving as collateral in this deal drops by more than 30%, that the first dollar of principal is impaired. And so that's something that they can get really comfortable with. And so an example of a capital partner I can give some real ones, but I'll start with like the hypothetical one that we're going to be looking to scale with here shortly is like a real estate credit fund. So folks that are very comfortable writing traditional loans against real estate property, but what we're going to them and saying is, hey, instead of, writing a loan against that property and collecting an interest rate, fund the equivalent amount of capital into this joint venture. And instead of taking an interest rate, take 60% of Bitcoin's upside over the next 5 years. And so that's a great way for these types of family offices, credit funds, high net worth individuals to start gaining Bitcoin exposure, but also not tiptoeing in like what we see when wealth advisors recommend like a 1 to 3% allocation. Because this is fundamentally a principal protected product, when we go to capital and we offer them something like 60% Bitcoin or 60% MSTR upside, which we do have live deals for that as well. So I'll get into that on the Bitcoin treasury angle. They look at that and they're saying, wow, that's amazing. This is an asymmetric bet. I'm getting 60% of the upside. And even if the asymmetric bet goes down, it's negative, like it's a big bet either way. Either Bitcoin is the next thing or it's going to zero. In the going to zero scenario, they didn't make any money, but they get a full return of principal within, at the most, a 5-year lockup period. So what's really interesting is we've just completed a number of deals, some of which, because we buy iBit and custody at Schwab, when I first joined Sovana, I said, hey, I think I know some folks in the Bitcoin treasury space that would take 60% upside on MSTR with full principal protection if you offered it to them. And so we went out to some of those folks. And luckily enough, there were also some folks on the real estate wait list, of which we have already hundreds of millions in demand. And they were willing to take 30, 35, 40% upside on MSTR, giving our capital partners 60, 65, 70% upside on MSTR with full principal protection. And so you have to ask yourself, like even the biggest MSTR haters or even Bitcoin haters, if you offer them a fully principal protected instrument backed by residential real estate that gives them 60% plus of the upside and no downside and a maximum 5-year lockup, that's a instrument that just about any capital allocator has to look at very seriously, especially if they've yet to tiptoe their allocation into the Bitcoin space. And so those are kind of the capital pools that we're touching. Right now, the game is about building track records. So we're not actually even taking economics on these early deals, which is why folks should, if they're interested, should reach out sooner than later, because in the future, what we're going to do at Sovana is take a carry in the capital partners upside. But right now, we're simply matching the capital allocators with the real estate owners and just matching those deals until we reach enough track record and size that we can start funding in scale.
Wow, that's really cool. I'm sure there's some people watching too who are interested in, I guess, that capital partnership product. That's really innovative, and yeah, I mean that speaks to the track record that real estate certainly has, and in being able to secure more attractive funding rates. And yeah, I think taking that kind of Bitcoin or Bitcoin treasury spin on things to protect downside is something that I think will I think you guys are going to have some success there. Just thinking through the implications, that's a really cool way that you're securing funding.
Let me maybe just touch on that one more bit. So the guy that's sitting on the capital partner side of this last deal, who we gave 70% MSTR upside to, and the deal's closing in the next day or two, and then we're going to come out with that individual and issue some press releases, try to make a bigger splash, maybe try to get on CNBC if they'll have us. That individual is already fully allocated to Bitcoin and MSTR, but he was struggling to allocate more to the position in a way that his wife could accept. And so once he heard about this, he's like, oh, wow, I can tell my wife that this is a way to get more exposure to MSTR without risking any principal. This is how I can actually extend even further into this trade than what I was normally comfortable allocating to. So that's just super interesting. And in our opinion, and towards Sanjay's mission of basically helping folks get major allocations to Bitcoin that haven't already. This is unlocking capital that for whatever reason was just not yet willing to enter the monetary network.
Yeah, really interesting stuff. And to tie it again a little bit towards Bitcoin treasury companies, something we talk about, Chase, is like, man, I wish we had access to some capital market levers that Strategy have, and that's one of the big value props to becoming an investor in a Bitcoin treasury company such as Strategy is they can access funding that's completely different from an individual like you or I can access. But yeah, I'm just thinking in real time here, Sovana does offer this kind of way for the individual investor to do something creative in a way they otherwise would not be able to. Maybe their income's restricting them in some sense. So that's really cool stuff. Was that kind of the thought behind this whole venture?
Yeah, that's exactly right. I mean, one way we think about it is by bringing two parties together, we unlock and bring capital into Bitcoin. On the one side, on the real estate side, you have a party that has tons of conviction, but no capital. And on the other side, you have a party who has tons of capital, but not that level of conviction. And so the real estate side can't buy Bitcoin because they don't have the capital. And the other side can't buy Bitcoin because they don't have the conviction. But by bringing them together in a partnership, and that's exactly what it is. In fact, our product, we call it the Bitcoin Investment Partnership. By bringing conviction and capital together, you bring more people and more dollars into Bitcoin than you otherwise could have. And that's what I'd say I love most about the product is two parties have more Bitcoin now than they otherwise would have.
Yeah, it really feels like a partnership for sure. You've laid the case for who this product is for, and correct me if I'm wrong. You said it's for accredited investors on a second home, essentially. Who is this wrong for? I was digging through the site and it says you would be willing to turn people away. So can you give me like an example of someone you'd say no to, or who might not just be right for this product?
I'm glad you brought that up, Tyler. On the website, we say that we don't want you to sign up for this product if we don't believe it's right for you. What makes it right for you is actually quite simple. First, on the sort of the technical requirements. At the moment, as Chase said, yes, we are only working with investment properties. So if you have a rental property or if you have a secondary vacation home, those are what we're working on right now. We do eventually want to get to primary residences, but it's more of a crawl before you walk before you run. It's more of a sequencing thing. You have to be very thoughtful and very careful. It's not impossible to do. You just have to take adequate care before working with a property where someone sleeps at night in that way. And also for the same reason, we're working with only accredited investors right now. But other than that, all that is required is that you believe Bitcoin will be up at some point over the next 5 years from the day that you originate the position. Because you don't have to wait out the entire 5-year term, as long as Bitcoin is higher during the 5 years after you originate a position, you can give us a phone call and we'll end the position and write you a check. That's really the only. Actually, wait. Let me add one thing to that. You also have to be able, and we note this on the website, you have to be able to weather a downturn. If you originate a position today and Bitcoin goes down 10% tomorrow, which is, as we know, the first rule of Bitcoin, it always goes down the day you buy it or the day after you buy it, you have to be able to wait it out. You have to, and that's where the conviction comes in. You have to understand what you just bought, and that it always goes down when someone buys it. And so if you have those two, if you believe those two things, then our product might be right for you.
when talking with founders, I love to dream a little bit, and maybe you could talk about like what does you're in this proof of concept, I would say, kind of mode. You're packaging up these loans. You've got this 5-year term now. What does Sovana look like at scale? Maybe 5, 10, 15 years from now. Are we talking hundreds of thousands of homes? I always dream about derivatives of Bitcoin as the network grows, and we've really seen this last cycle is the institutional adoption moment for Bitcoin. It's kind of its IPO moment, as a few people have characterized it at. But is there a securitized market for these types of contracts in the future for this type of product? Dream a little bit with me. What is the scaling of Sovana, and what does that look like down the road in a an ideal world?
It's all of the above. We really see this as the base layer, our starting point. Our starting point, what's most important to us at Sovana is that folks have Bitcoin. Once you have, if Bitcoin really is the lifeboat that we believe it is against incoming, oncoming monetary debasement, and whatnot, capital controls, whatever it might be that follows, then the most important thing about Bitcoin is that you have some. After that, we can layer on top any number of products and services. For example, at some point, if you're sitting on a huge Bitcoin gain and you don't want to sell it, why not be able to borrow against it? We know that that's a product that's in heavy demand. All sorts of companies out there, Ledin might be one of the bigger names that folks recognize. We'd love to offer a custody solution. Right now, we buy IBIT, the ETF, but we'd love to offer physical Bitcoin and a custody solution on top of that. On the capital side, exactly what you said. We'd love to securitize and sell these positions, maybe even tokenize these positions. So there really is a bunch of products to expand into once we get this base layer of get people some Bitcoin.
What signals have you seen recently, Chase? We've talked about this a little bit, but I would say since Strategy adopted its model of adding Bitcoin to its balance sheet, what have been the key signals that have flagged for you that Bitcoin really is growing up and it's going to realize this potential of being capital and money that underpins much of how the economy works. You mentioned Jesse Meyer's chart about Bitcoin sucking dollars from different pools of capital, and you guys are certainly attacking the real estate market here. But what have you flagged as the really important moments, I would say, in the last cycle?
It's a good question. I mean, I think I created some kind of a tweet at the end of 2025, something along the lines of like, this was the most bullish year in Bitcoin despite the price being down or flat, because we did have so many really new unlocks, whether it had to do with regulatory clarity, institutional adoption, BlackRock ETF, bank allocations. They're like incredible professional investors, brand name investors who have signed off on Bitcoin, the asset class, things from the CFTC and the SEC providing, green lights. There really was so much good that happened in 2025 that I think it's lost on people because it just didn't end up reflected in price. But the corporate and institutional and regulatory adoption, that's not even to mention on the scale of the US strategic Bitcoin reserve and other nation states and central bank adoption, which has finally begun and has always been part of any true Bitcoin maxi's thesis when it comes to kind of becoming the new base layer of money. These things are happening. They are somehow not reflected in price, and that's the opportunity. Like that's the gap between risk and the opportunity there, the perceived risk, and for those that are on the ground and understand this asset class and how the fundamentals haven't changed, have only strengthened, and then all of the outside parties are only starting to adopt. Everything points towards this asset class having, a blue ocean to run over the next decade, and all threatening parties having kind of given up on trying to fight it and starting to figure out, how do I embrace this? How do I profit from Bitcoin's rise? And we've even seen some things like that in the mortgage space, where Fannie Mae is starting to treat Bitcoin as an asset that can be used as proof of net worth when writing mortgages, or providing credit against real estate to buy a home. So even in the real estate space, we're starting to see more adoption and acceptance of Bitcoin, the asset class. So, I mean, there's really too many things to list. It's frustrating that it doesn't reflect in price, and definitely not reflected in Bitcoin Twitter sentiment right now. But it's very clear, if you were here 2 years ago, that there are a lot of new mouths at the Bitcoin trough trying to figure out how they're going to participate in Bitcoin's appreciation. And honestly, you could argue that perhaps that's why Bitcoin has remained down and flat, is that these parties are trying to figure out how to optimally position themselves before they let price run away, or trying to acquire as much of this finite asset before price runs away. So it's just hard not to be bullish on Bitcoin. And it is, I think some on our team are bullish real estate over the long term, because it does present some amount of scarcity, obviously major amounts of utility and consumption value. But it's just hard for me to look at real estate's past performance and future outlook and all the backdrop there against Bitcoin's past performance and future outlook, especially at these entry prices, and not want to convert if I could. Like what I like to ask people is, when they're kind of weighing Sovana as an opportunity, as should this business exist, I say, if all of that 35 trillion of US residential real estate value could just, in the snap of a finger, convert into Bitcoin, how much of it would? Like, if it was free, it cost them nothing, and it was that easy to do, how much of that 35 trillion in a moment would choose to convert into Bitcoin? I think it's trillions of dollars.
Great points. You know, thinking, I think it was Robbie Mitchnick with BlackRock, who's talked about in his conversations he has with allocators into this space, into Bitcoin derivative products like IBIT, like their covered call fund that they recently launched. He said that a lot of, I guess, legacy investors still have, they look at cascading liquidations and leverage that contribute to Bitcoin's volatility as something that still scares them off. And that's why, BlackRock are building, products that may be more attuned to those, needs and feedback from investors who might want to dip their toe into the Bitcoin waters. Now, with your product at Sovana, obviously that's not really an issue, even on the capital raising side, right? You've kind of stripped away that variability. There's still a component that is volatile, that is exposed to Bitcoin or MSTR's price. But how important was stripping away that for your in your funding by saying, hey, we've got real estate here backstopping the whole thing?
On the capital side, it's critical. These are folks who don't have the same level of conviction. In a weird way, we're seeing, if you have, the more conviction you have, the less attractive the capital side of Sovana becomes. If you have deep conviction in Bitcoin, like all of us here, then we'd rather just YOLO in, and because we know that the downside risk isn't as big as the market perceives. We understand the asset deeply. We know what we're buying. And so we'd rather just buy, if we have the capital, right? We'd rather just buy the Bitcoin directly. And so in a funny way, we're not targeting, again, on the capital side of the equation, we're not targeting hardcore Bitcoin maxi, double, triple maxis. And at the same time, we're not targeting the, Bitcoin is rat poison crowd. If you have not, if Bitcoin disgusts you for whatever reason, and you want nothing to do with it, then maybe we'll wait until you are more open to Bitcoin before we talk to you. We're focusing on folks in the middle. And I think that is a very, very large middle. It's almost everyone I've talked to in my own evangelizing of Bitcoin in the last decade and a half. It's folks who totally understand, like I was saying earlier, rationally, intellectually, but still have this emotional fear of the unknown, what still is a very nascent asset when you think about one of its biggest competitors being thousands of years old. That's who we're focusing on. I should say we eventually do think our capital side could be attractive to Bitcoiners. Eventually, we'd like to take Bitcoin capital. So right now we're taking USD, but imagine you're early Bitcoiner, you're an OG, you're a whale, and you'd like to set a floor on some of your Bitcoin. You'd like to do that without incurring a capital gain. So what we want to do and what our structure is perfectly set up to do is accept Bitcoin from a whale and tell that whale, we can guarantee that that Bitcoin that you contribute to Sovana's fund has a floor below it, right? It will not, you can definitely sell it for today's price. And you get to keep 60% of the upside. So you get the best of both worlds. You get a floor and you get upside. And you defer the capital gain. So that's a product for the capital side that we think will appeal to Bitcoiners. But again, crawl before you walk, before you run. We're going to get to that a little bit later.
Yeah, you can imagine that, once we've gained wider awareness in the Bitcoin space, you can imagine that when OG Bitcoiners or just any Bitcoiner really feels like this is getting a little toppy, like maybe we're starting to reach a little bit of a bull market excess right here, instead of selling or just hodling through the next downturn, you, like Sanjay said, you're like, okay, I'm willing to lock this in and take only 60% of where we go from here over the next 5 years, because that's essentially what it is, right? It's instead of dollars being used to buy Bitcoin, it's just Bitcoin straight into this joint venture partnership. And I'm really excited to see how that dynamic also might introduce kind of a novel way for Bitcoiners to participate and remain in the Bitcoin network.
Yeah, really cool stuff. There's so much opportunity there, and I think Bitcoin really unlocks so much of this. I'm excited to see you guys building in and around the space, and so excited for all these new products that are going to come out and offer different types of exposure to Bitcoin. Because as we know that as more and more people find out about Bitcoin, they're scared off by the volatility. They don't understand it, and they're going to want different types of exposure. So that's really interesting. I guess a question is, do you think where's the more challenging product market fit? Is it on the capital side? Is it for clients who want to use this product to buy more Bitcoin today? Where have you found what's been the trickiest part to navigate?
Definitely on the capital side. The product, we're Bitcoiners. I think this product is red meat for Bitcoiners. I thought that before we launched it. Our demand has proven that to be true. And from our own experience as Bitcoiners, we know that the hardest part about Bitcoin is explaining it, getting your friends to understand it. And because when we're looking for capital partners, we're not looking for orange-pilled capital, right? For the reasons I explained, we are specifically targeting the folks who, maybe haven't yet made an allocation to Bitcoin, and they haven't because they don't understand Bitcoin. If they did fully, then they'd probably already have an allocation to Bitcoin. And so for the most part, right, there are capital, folks find our product on the capital side appealing for other reasons too, but the lion's share of potential capital, we believe, sits with folks who don't fully understand Bitcoin. And that's always a slower process. It's always a process where you have to explain and answer questions and face arguments why Bitcoin may not succeed and so on. But that's something, as Bitcoiners, I certainly love doing. I love talking about Bitcoin. And so we're enjoying that, but it's definitely different than the hundreds of orange-pilled real estate owners who are banging on our door saying, when can you fund me?
Yeah. I think a lot of people are gonna find this product really incredible in a way. There's a whole segment of Bitcoiners, as we know, who really are in this situation and want more exposure to Bitcoin and are, like you said, they're going to bang down your door as soon as they see this video and say, how can I get a piece of that action? I stepped on you a little bit there, Chase. Feel free to add on.
I was just going to say, like, if you think about your own Bitcoin journey, anybody's, it starts out as like having never heard of Bitcoin, becoming aware of it, doing the homework, and, getting curious, maybe being ready to make some kind of an allocation all the way to obviously the very end, where it's like every spare dollar in my bank account, I have a DCA on every, fiat dollar I want to turn into Bitcoin as soon as possible, liquidate every chair in the house except one, so that's like the timeline of the Bitcoin journey. And to Sanjay's point, that lion's share is you're basically at Sovana trying to capture the capital partner when they've heard about Bitcoin, gotten curious enough about Bitcoin, are ready to allocate some amount to Bitcoin, but haven't like continued down the path to the point where they no longer see the principal protection as valuable. So you're trying to catch them in this really unique moment in time. And it's not like there's a database of like, hey, here's the database you can buy of 30,000 contacts of people that are, ready to allocate to Bitcoin, but only in a principal protected way. And they're also not, in the next 2 weeks going to do the homework it takes to just expose themselves 100% to Bitcoin. So that's the challenge on Sovana's front until we reach this track record of, call it 10, 15, 20 million of position funded, because we do, and this is credit to Sanjay and our other co-founder, Mitch, who works on the real estate side, we do have capital partners who are ready to deploy at scale in a programmatic way once we've proven out that level of portfolio track record. And so it's really just this game right now of 0 to 1 of, how do we fight for every $1 million, 500K here of funding until we get to that threshold where we can then just go to the programmatic capital providers who will just say, anytime you have, a real estate owner ready to accept the 60-40 split, here's the capital, call for it.
Really cool. Okay, so I'm an accredited investor. I've got a rental property or a vacation home that's sitting there. I've got, I'm sitting on some equity that's trapped. What's my next step? How do I get in touch with the team and make this deal happen?
Just head on over to Sovana.io. We have a big fat get started button. You'll enter a few details on your property. You probably fill out the form in 30 seconds to a minute, and we'll ask you a few questions, particularly how much of the upside you are okay taking. If you'd rather wait until 40%. Right now we have a lot of capital, but we also have we have a lot of customers who are willing to take less than even 40. So presumably because of the price softness right now, we have customers who are saying, hey, I'll take 35% of the upside. I'll take 30% of the upside if you can fund me sooner. So we'll ask you how much of the upside you're willing to take or you're okay taking, and we'll reach out if it's a fit.
And if you're on the capital side, it's a very similar process. You're just going to Sovana.io/capital, and you can add yourself to that wait list there.
Great stuff. Anything I didn't cover, guys, that you'd like to touch on that we can cover today?
I mean, I just keep coming back to this idea. Like I'm astonished that we actually are deploying capital into positions that are offering 70% MSTR upside over the next 5 years with full real estate backed principal protection. Like, I just think that is such an insane offering. I want more people to know that exists, because I believe that, the capital side would start beating down our door as much as the real estate side is, if they really knew that this is real, positions are being funded today at these terms. So, you just can't replicate that trade anywhere else. There is no one else offering 70%, 65, 60% MSTR upside or Bitcoin upside with full principal protection against real estate. To me, it's a no-brainer, and I look forward to helping a lot more people get into these Bitcoin investment partnerships.
Great stuff. This has been a really illuminating conversation, and thanks for introing me and the audience to this product. One thing I have all our guests say before they leave is stay orange. Chase, we'll start with you.
Stay orange.
Stay orange.
Love it. Ladies and gentlemen, Sanjay Mavinkurve and Chase Palmieri from Sovana.